Important news that we need to immediately address. The RBI, yes, the Reserve Bank of India has deferred the deadline to implement new rules for exchange-traded forex derivatives to the 3rd of May. The new rules were supposed to kick in from tomorrow. Ritu Singh is standing by with this breaking news. Ritu, what is the RBI saying in its latest statement?
Well, this is a very, very important development that is coming in for the exchange-traded currency derivative market, which runs into billions of dollars of turnover on a daily basis. Now here, what the Reserve Bank of India has essentially said today, amid all of this concern that has been raised by brokers about recent rules impacting the volumes come the 5th of April, now the Reserve Bank of India has extended a deadline to implement the exchange-traded derivative contract rules to the 3rd of May from the 5th of April earlier. Remember, in a January circular earlier this year, the RBI had effectively said that it had disallowed currency derivative trading on exchanges without an underlying position. Now, RBI in today's clarification said that its stance on currency derivative trading has remained unchanged through the years since the rule was first brought in 2008 and the subsequent FEMA changes that had come in from 2014 onwards. So essentially for the last 10 years, this rule has remained in place. However, it didn't seem like it was implemented, but now with RBI reiterating that the deadline had strictly been moved to April, there were a lot of concerns raised by brokers that this would kill the volumes on exchanges, on the NSE largely where this is currently traded, and move the money offshore. But now Reserve Bank of India has said that because of the feedback that they've received from the market, they have decided to extend this deadline, but they've re-emphasized that there is no change in the RBI's approach to this matter, and they reiterate that underlying is something that is required to be made. But of course, the deadline now being extended should come as a relief to brokers. If you recall, yesterday, Zerodha, one of the largest brokers in the country, had informed its clients that they had to wind up their positions in forex currency derivative markets before the 5th of April, or they would be in violation of FEMA rules. Now a huge relief coming in with this deadline being extended to the 3rd of May.
Right. Ritu, just stay with us. And it is important to point out that this extension has come after feedback received and recent developments. This is what the RBI has said. Give us a sense of the kind of feedback that has come in over the last 3 days. What were some of the concerns raised by the stakeholders?
Well, the daily notional turnover in this trading was billions of dollars on a daily basis, and the brokers that we've been speaking to over the course of the last week or so have indicated that with these rules being implemented, daily trading volumes could fall by as much as 80 to 90%, virtually killing this market. So that was the extent of the concern. Of course, RBI had earlier, in a measure to aid the retail investors in the market, had said that up to $100 million, no underlying proof would be required to be submitted, but of course it would be understood that there is one. So the concern was that almost 80-90% of the market would be killed effective the 5th of April if these rules were to be brought in. But now, of course, that deadline has been extended to the 3rd of May. So it is a problem that remains. It's just that the timeline has now been extended. What happens after that, if this trading moves offshore to markets like Dubai or Singapore, we'll have to see. And of course, we will take up this question with the Reserve Bank of India in the Monetary Policy Conference tomorrow.
All right. So let's wait and see what the RBI has to say on this. Thank you very much, Ritu, for joining us with that breaking update. Very important piece of news coming in from the RBI. If we can go across to our guests.